Hey guys, good afternoon. Good afternoon. So we made it up to the 6 month one, and this is the perfect spot. It's the 6 month one, Arval, one period, 67.74 to 67.82. So that's about the cheapest 6 month risk they can sell. Put that stop right behind the 14 period too. And go for it, right? That pullback. So really between 67.74, 67.82. If you're going to spread it, you would spread it here above 68.52, so maybe 68.55, 60, and then watch for that pullback. So let's just say 67.75. If we're going to be looking for that 10% pullback, that's 675, 677.50. Sorry, 677.50. And oops, want a period in there. 60.97.5. So right down here by my 60.31.25. So almost 6,100. So let's just say 6,100 to 66,000. 60.30. All right, so this is the target. That is a nice 10% pullback. And how fast could you get down there? How many points is that? That's what I want to, always figure out how long to target. And it's easy to figure out. So that's 664 points. Um, we want the Santa rally to start, you know, OPEX, after OPEX. And so that would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Is there like a Columbus Day in here or something? And so we can just look here at the PT2 real quick. Well, I don't have a PT2 on this. We'll put one on top. Put it as daily. Put it 10-day. So that's going to take more than 10 days. Let me put the 3 on there real quick. Oh, it's even lower. Okay. So we're going to have to broaden our horizons out. Let's make that a 20-day. Let's just say 23-day. That's 394. So that would be 2 times a 20-day. 10% is too much. They're not going to get a 10% rally. That's what this is telling me. Yeah, 30 days is 417. So it would have to sell off harder than it would be in the tails on so 10 is just too much. Let's put this back into reality. 5%. 10 is too much. 338.75. Too much. Okay, 64.36.25. This is more like it. Much more like it. This is more reasonable for Santa rally. And that gets us right back up there to the second ledge. And the middle is where they will be hedging it to. So there's middle 1. And let's get middle 2. All right, 6,200, 6,400 for the means, and 64.36.25 for the 5%. So that looks much better than all the way down. This is much more reasonable. All right. 417.75. Right in here. There's 416.75. That's close. It is close enough. All right. 6,400. 6,300. 63.50. 63.60. Okay. We got some targets. Let's see when the party starts. That made a nice curve down, and we're ready to rock and roll up. The next leg up, this was 30 days. That's maybe too much. Put this back down to, we can do 10, 20, 30 and walk it up. 273. All right, 273 is going to get us just under 60, right at 6,500. I like that. That one looks good. Let's just put it at 6,500. Yep, that's perfect. 6,500, first one, nice and easy. And then the how many days until did I say until OPEX? So 12 or 13 days. I think there is a holiday in there, so I'm going to put 12. All right, 308.75 or 221. And if you're going down, you usually definitely shoot for the threes. A 1 period 13-day. $138. We've been in low volatility. I have a feeling that's going to start rising. It will start rising. So we want the one period to get to 221 from 130. 90 points. So we're going to look for that 90 point, 100 point move first. There's your 90 points. We're right on the 90 point. That's where it bounced. So we're going to go back and touch that again right here at this top. And that's going to be your flipper line coming down. That'll be the one period at the 13-day 2. And then we'll be walking it up every day after that, trying to get to that 13-day 3. And that'll get us to the OPEX. So if you want to sell premium for that 13 days, we can put a 13-day distribution on. $68.14. Yep, 65.80, and then 6,500, 64.63, 63.70 matches. I got a winner. I got a confluence right here at this 14.65. 63.70 looks like a pretty good level. Let's see if that works. All right. Now the 68.14 also is part of that 6-month spread. It's on the close, I think. No, not that high. 67.82. All right. So that might be their hedge if they're going to be going for a 10-day move down. There's their spread right there. All right, then. So the risk 67.75 to 68.15. Is 40. Wait, I did that wrong. 40 points. 40-point risk. That's pretty cheap. 40 points for 13 days. I don't know, it seems cheap to me. Okay, I don't think I'm going to get it. 41. That'll work. All right. So 41-point risk and $275 to 310. 385, 407.50. That's a good risk reward right there. Cheap risk. All right. So that's how to measure, ranges. It's time and price. And with the little tool that I've got, I can put the distance on it whenever, out in the future, and you can model these historical realized volatility levels and then use that with your options. So then that's when you would want to come over to Quick Strike and look to see in 13 days where that falls on the calendar. And we can do that right now. So, what day did I say that was? The 17th, right here. EW3 V5. All right. Looks like 67.40 is the mean at the moment. And we want to go to 6,500, 6,580, and 6,370 perhaps. Bring this out a few strikes. So 6,370 is way down here in the threes. That's way down there at your 9 delta, sort of like in the nosebleed section. '64, 63.50. Here's your 13. Got some good premium on this. And then even lower, 63.70. No, other way. 66.84. First stop. So you could time this to pick up premium all the way down. So here's your 35 delta at 66.70. I'm going to drop that down to 66.70. There you go. There's your 35 delta. That's a pretty good first target. Easy peasy. And then see if it can drop down lower towards that 67.40. We're just sitting on it. Where's the at the money? Sorry. 67.25. 67.20. There's your go line right here. 67.25, 67.20. Right at today's open. So that is a good level. That's pretty good right there. I like that. All right, let's see if they take the bait. Find the cheap risk. The ones are absolutely what if they're selling premium, that's where they look. So using, just time and price, you can model where the 1 period, 14 period is going into the level and put up a distribution. So I can put up a 13-day 1 period also. Why did I do that? And then every day we can drop this down. Um, there we go. One period one right there, right where the low is. All right. So this looks really good for a place for them to start selling that premium, and see if we can get this back towards the middle, which would be right here, 64.15, 6400, and 6200, 6198. So here, oops. So if you like modeling range to get an idea of where your sweet spots are, this is the indicator for you right there. All right, so that's it for today. Gold was right in the middle of its range. Bitcoin did get up there, 1.25 of its daily range, and crude came down to daily too today pretty nicely. And the VIX definitely ready um, to pick back up. We have a nice trend line going. Here we go. So we'll see if that holds. Anything above 1661 is going to be the flipper on that. Just take another peek at my GEX. See where 1661 is. One last time. All right, so that would be October 22nd. Yep. October 15th. So that's going up to 19. All right. And then we fall back down on the 22nd. But there's your target right there, 19. Wow, I love this website. So it's like it's like a yo-yo, right? So 19 is up here at our 37-day one, right there. All right. Well, that sounds like a plan to me. All right. Plan A. So one thing about trading is don't ever hesitate to change plans. I mean, don't be adamant that the market's got to do something because you planned it out. It can do all kinds of crazy things. Somebody can find a microphone and it will just totally change. But for right now, it looks like the path for volatility would be favorable for premium selling and at this location, thereabouts. So at some point in the near future, we might continue to see this moving up to 19 going into OPEX. All right. The pullback we've all been waiting for. I hope y'all have a great night and let me know if y'all would like to talk about the volatility. I would gladly do so. Talk to you later. Thank you.